Trading can be super hard and overcomplicated, which is why I've made this video right here. So make sure you stick around and watch it as I give you a very simple strategy based on pro trend trading with a checklist which you can start using every single day to make sure that you're ready to execute A+ trading setups. So let's get straight into it. But before we jump into the charts, as always, I'm going to ask you to do me a massive favor. Smash that like and subscribe button. It helps me know that you are enjoying this content, that you find it useful. And don't forget, I trade live on YouTube now every day from 10 a.m. Eastern time. So I hope to see you in the live stream real soon. Step one then that you need to do every single day when you turn up to the screens is do a self-check, or as I call it, an MOT. How do you feel? You need to be in peak condition every day. So if there's an occasion where you haven't slept enough, where you're not feeling particularly well, if you're feeling under the weather, maybe you've had an argument or some disagreement with friends, family members, loved ones, anything like that, anything where you haven't eaten and you're not hydrated, all these things are going to affect your performance. So check in with yourself before you even look at the charts, because you are competing in the market with professionals. So you need to be in the best possible peak condition to do that. If you are feeling anywhere off your best, take the day off. It's much better to take a day off and rest and come back to the charts the next day when you are feeling like you can compete with the best in the world. Step two is to check the economic calendar. You need to be aware of any major news event that's going to happen that day. So I first like to check out the economic calendar using marketwatch.com. It's free. You can check it every single day and just see what big news events are coming that day and in forthcoming days. Also, remember if you're in earnings season, because that's going to affect the liquidity and it's going to affect the big drivers in the market. So like this week, we just had 5 of the big Mag 7 all doing earnings after hours, which meant the last hour into close of the stock exchange, you could expect some odd moves as you had repositioning in the market by market makers on those Mag 7 companies. And of course, we know that tech is heavily weighted in the NQ, so it will affect the NQ contract. So always worth noting what news events you have coming that day. Step 3 is to learn the higher time frame narrative. So looking here then on the NQ, this is a daily chart going back to Thursday, the 31st of October. What can we learn from looking at this higher time frame narrative? Well, we can see the high of week was put in Wednesday. So in terms of a weekly model, Tuesday gave us the high and low of the weekly range. Wednesday failed to break outside of it. This is a failed breakout, coming to the top Bollinger Band on a daily and then repricing all the way down for a mean reversion into the 5-day. Thursday was a continuation trade because we had buyers stuck at the top of the range into the second standard deviation or the top Bollinger Band. So we had a continuation trade from the 5-day, 20-day all the way down to the lower Bollinger Band. So we know now we are in a sell. We are in a sell structure across multiple timeframes coming back into some key daily levels. But we know the market is heavy. So what do we need to do? We need to think about how the market likes to move. Now, I'm going to focus in this video on a pro trend. So if the market in the higher time frame is in a sell, we don't want to be looking to short the lows, right? We're going to wait for price to come back up, give us a reason to enter here, and then move back towards the lows. And it's right here that I'm going to be looking to execute a trade, because I want to trade in the higher time frame direction, because those are the easy trades in the market. When we're in a sell, yes, the market here is likely to pull back. We know it's likely to pull back, but actually waiting for that pullback to happen and then attacking the sell, getting short on the market is a much more probable trade. So those are the conditions that I'm going to stick with. The same for when we're in upside moves. I let the pullbacks happen and then I look to join the higher time frame narrative for the buys. So we're going to focus on the sell. So we know we are going to need to wait for the market to pull back. So now I'm going to skip down to a slightly lower time frame looking at the hourly. So we know we're looking for sells in the market, but we need to wait for that pullback to happen like we just talked about. So looking at the hourly, what can we think about? We can first think about this strong high here. Okay, this is where sellers last participated, and we can mark this out and put a golden zone in here so that we know an area where sellers might want to come in based on the Fibonacci. We'll also notice that this golden zone is happening right next to an order block. All right, these levels right here are where our sellers started participating. And we have an imbalance on the hourly candle right here. So this is definitely an area of interest as we start getting up into and around this range. So we've already marked this out. We're now confident that the market might want to reprice at least to 50% into premium and higher, and then we can wait for a sell. On top of that, what can we do? We can look at some very simple anchored VWAPs. So we can run an anchored VWAP. So I'm going to come up here and this 10 o'clock candle. This is the previous New York session high. So I'm going to run an anchored VWAP off there. Equivalently, the previous New York session IB high. So this anchored VWAP takes us right down into supply, into the imbalance. So now we've got three levels of confluence here where we think that the market might want to trade up to, because we know sellers that were short here, this is their average price, okay, on the way down. We also know sellers participated in this block here for the continuation, and we have an imbalance here. So lots of reasons right now to think that the market might want to draw up here. But remember, this trade setup, we're not going to focus on that pullback trade. We're going to focus on the short as and when that pullback trade finishes, to then take the pro trend, the trend short in alignment with the daily, the 4 hour, the hourly, and the lower time frame for a much easier setup. Now, the easiest thing to do if you're the type of trader that enters early, that you can't be patient enough, is to set price alerts. So you could simply do it at the bottom of this gray box, come into here, click settings, scroll down to alerts and set a price alert. And that way you don't need to watch the chart all the time, all day. You can just wait for it to alert you via text, via email, etc., via even an alert system on your computer, and then come back to the screens once and when you get there. So now we know, right? We're feeling good enough to trade. We understand the news events happening on the day, and we know what the pro trend is. We now need to identify what the actual market is. So right down here, right now, we are just in the creation of a range. All right, this would be what I would call the range right here. And we need to think about draws on liquidity. All right, lower time frame, like we said, we think it's going to come up here based on the higher time frame, but now we can look at some more key levels. So this right here looks like a very obvious block that it might want to come into based on this lower time frame, so we can mark that out as well. And we have these relative equal highs right here, which it's probably going to come and want to attack. Now, if you don't believe me, if you're thinking this is all hindsight, you can go back and watch my live stream from Friday where I talked about this exact setup, which we're getting into right now. And I also actually ended up trading it live with my Discord afterwards for some good profit. So we know that once we break out of this range right here, all right, this range that we're in, we're likely to attack this, possibly come into and around this area. And it's in this area where we're going to be interested in a short setup. So let's get into that now and see if the market can get there. So now we've mapped out where we think the market might want to go. We know the draws on liquidity and we know the type of trade we are looking for. So now we simply wait, don't we? We wait for it to come into a level of interest. I've now turned my flow zone indicator on. Remember, you can get this completely for free if you do my course, which is $399 currently on sale. Again, the link is down below. One-time fee, okay? So let's just play this through now and watch what the market does, all right, as we come into that open. So we have a news event there. That's the 8:30 news event. And then we have another event at 10 o'clock. Okay, and you'll see that it's marked out down here. We've got previous day close, previous day low. Let's just see what this market does. Again, there is always that counter trend trade if you want to take it back to the upside. But what we're going to be focused on is the pro trend trade. So now we're getting into the first area of interest. Again, we've swept this liquidity, this first level. You can remember right here, these equal highs. So we can get rid of that. All right. We've now taken out that equal high. So as we can see, the market is into our first area of interest right here. And what do we have? All right, this is the giant old imbalance on the H1, the gray box. We have this supply block right here based on the lower time frame, the M5. Remember, you can see it if I move this over here. This is where we did a drop, base drop. All right, so we know sellers are in here. What else do we have? Right here, we have a higher time frame algorithm. Hard to see here, this red line right here. Higher time frame algo right here, which we knew the market would want to draw towards. And more importantly, the anchored VWAP of yesterday's high of day. All right, this anchored VWAP, we know this is the average price of sellers who got involved in the market yesterday. So this is now becoming a very high probability area where shorts might want to start re-entering in the market. On top of that, again, we can do very simply a fib just to make sure that we've got this analyzed right. Let's go from this high to the low, and where are we? We're just in between the 61 and 70% fib. So lots of reasons now to think that this higher time frame pullback may start to be coming towards an end. So the question we need to ask ourselves is it going to give us a reason to enter? On top of this, we can think about the current structure. We have what most would call a low resistance liquidity run right here. Basically just a simple trend line that we know buyers have stepped in late in the market. Remember, when you're looking at the market, you always want to think about two things. What is the location and what is the momentum? Is the location of a 60 to 70% pullback a good area to think about buying? No, it's not. It's not buying cheap, is it? This is buying expensive. This is buying in premium. So although momentum currently is upside like we talked about, we're always going to be focused on the pro trend. If I could give any advice to newer traders, it would be to always focus on the pro trend. Wait for the lower time frame to get back into alignment with the higher time frame and then attack the market. That's going to be the easier play. So let's see what we get here. Here's the first attempt of the failure of that trend line, and you can see we're starting to get weak here. Now, I would argue there's no direct shift here for me to get involved in. There is an initial balance high now, so I am interested in the short if we can start to break down with some aggression, which we're starting to do here. So this is the first instance right here of a lower high on the lower time frames. This is letting me know now narrative have changed. Lower time frame is now in a sell with the higher time frame. Now, don't worry if you missed this, no problem. We're going to find a good reason to get involved with. You don't have to chase the market. We're now looking at areas it might want to pull back to for us to get short in. So let's just let this play through. You can see the aggression here from the sellers, but we know there will always be more opportunities. The main reason for that right now is I'm looking at the initial balance, the IB high and the IB low. And what I don't want to do is chase the market down when we're in a ranging market. What I also know is we have stops who have been manipulated right here. So we've never come back and re-attempted this. So there isn't really a reason for me to get short yet. This was very simply a sweep. And if we're thinking about structure, the main structure in this session is like this, and we are still holding this right here. So I need to make sure that more buyers get trapped before I'm going to get involved in this. So let's just let it build out. And here we have the break of the initial balance high. So now I have two rules that come in place. Can we have a sustained auction above the initial balance high for a move higher, or are we going to do a failed auction and a rotation back down? My bet here is always the failed auction. And the reason for this is, again, we are in that golden pocket on the fib. We are in a supply block, and we are in a higher time frame narrative of lower. So now, I'm super interested if we can get a lower high, lower low. So here is the start of that move down. Now we need to see some form of displacement and a reason to get involved in the market. And this now is starting to give us a reason. So now we have a break underneath this right here. This is our change of character. Okay, very simple change of character under here. So this is now confirming to me that we have now trapped buyers above the IB high who have bought too expensive. We are looking for shorts and the flow zones are now starting to flip red. So we can now think about sells. Again, no need to rush here. We're waiting simply for buyers to get trapped as they try to bid it up. But we are in a sell structure, and as we're starting to reattack that high, we can now think about exactly the same thing as we talked about earlier. We can look at this fib now from this sweep of the high to the low, and we are coming back into a premium. So anywhere in this range is a good place to start thinking about the short as soon as it gives that signal. Driving up, and there is some displacement for the downside. So we're going to be late here just based on how we can get involved in on a replay. But we're going to move our stop loss up to the initial balance high, okay? And we can get our take profit at least under this low right here, okay? At least to that low right there. And then we can think about where it might want to come to later. Again, this is already a 2-to-1, and we can always hold runners, remember, for continuation. So now let's let that just run through. And if it gives us the ability and reason to start re-adding, like now we have a new break of structure right here. So now again, with displacement, we can think about potentially adding on to this position. So if it will give us the ability to add on a pop like this, back into here, we can add on. Remember, we're adding to our winners right now for continuations lower. So now we've got 3 on. Got to let it play out as always. And there we go, hit TP. How much easier was it to just play the pro trend? There's so many other ways you can look at this. But again, once the market trapped the buyers at the high of day, it became much, much easier for us to get involved in a very clear downtrend, which will probably continue into next week and beyond all the time that those buyers are trapped at the highs. So as a recap then, the steps that you need to see every time you come to the desk, or the checklist you need to go through. First, your personal assessment. Do you feel physically and mentally well enough to be trading? Secondly, what are the big news events on the day? What's the high impact news? Thirdly, what's the higher time frame narrative? Is the daily in a sell? Is the hourly in a sell? Are you in a buy, or are you actually in a range? Fourth, what is the draw on liquidity? You need to wait for the market to get to those areas of interest before you even consider taking a trade. And 5, can you get that pro trend trade with good risk reward once the market has shifted to a change of character, which is in favor of your signal? Once you get those 5 steps, trading becomes so much easier because you start ignoring all the noise between those areas of interest. Until next time, trade safe, and don't forget, I'm back live Monday to Friday, 10 a.m. Eastern time. I hope to see you there real soon.